Yo, what is going on in the market right now? We have all of big tech selling off right now, while at the same time, we have a bunch of other sectors rallying, like the real estate investment trust. Let me show you that. We got CubeSmart up 3.5%, Realty Income, well, it's in VG Properties. All these REITs are up like crazy today. But why is big tech falling? I'm going to go ahead and give you my thesis and my thoughts on that. I think it's a simple psychological rotation of money. So stocks like Meta, Google, Microsoft, all these big tech names acted as insulation in the high interest rate environment. It was actually a hedge. And because of that, all of these stocks got some premium valuations. All of them. All these, have PE ratios close to 30, and they all deserve it. I'm not saying they don't deserve it. They absolutely deserve their high PE ratios. But I want to go ahead and tell you that today, with this news of the low CPI data and the low inflation data, I think we're seeing a small rotation out of what was the hedge. We're seeing the money go into where there's yield and where they think the play is next. They're investing now in the sectors that have artificially been suppressed by the high interest rate environments, or stocks that are literally falling because of the high rates, like Realty Income. The only reason, well, not only reason, but the main reason all these REITs are falling is because of the high interest rate environment, because investors will just keep their money in the money market funds and the T-bills completely risk-free. Why would you buy a REIT when you could get the same yield inside a money market fund? Well, today we're starting to see the rotation, possibly the money coming out of the money market funds, the money coming out of the T-bills, and even the money coming out of big tech and going into these names. And I'll now quickly explain to you why Google, Meta, and all these big tech names were such good insulation and such good hedges into the high interest rate environment, because these companies actually benefit from the high interest rate environment. And it's not just big tech, it's also the other names in the stocks that don't have a lot of debt and have tons of cash. So check this out. Google right now, let's see how much cash they have. Google has $24 billion of cash, and that made them an interest just in the most recent quarter, $2.48 billion in pure interest. That's actually nuts. Let's check out Meta. So Meta also has a bunch of cash. Go check this from Microsoft. Actually, Microsoft's look amazing. But let me show you Meta real quick. So Meta has in cash right now $25 billion. That's up like crazy from what it used to be. So $25 billion of cash. And let's see how much interest they made. They made $310 million in pure interest in the most recent quarter. And look at this. If we zoom out, look, they didn't used to make a lot of interest. They're making the highest amount of interest they ever made because of the high interest rate environment, nearly $1 billion over the past year. So that's why I'm saying that these companies don't care about the high interest rate environment. And let me give y'all a quick portfolio update on how my stocks are doing. So we're actually only up 0.4% today. And that's because I do have some exposure to the big tech names like Meta and Google. But luckily, we also have, Realty Income that's saving the day here. Oh, we also have an incoming dividend from this company. As you know, Realty Income pays monthly dividends. And so every single month for the rest of my life, assuming no growth, I'll get $7.63. And they've been raising their dividend for over 25 years. Realty Income is a dividend aristocrat. That's why I love them. But yeah, we also have some other stocks doing decent today. Like McDonald's is up 1.68%. We're actually up on our McDonald's shares 4.15%. That was a pretty new position I just started. I really like McDonald's. We also have Nike. It's almost keeping its holdings there. We're up 1% on Nike. I also own Nike in my Moo portfolio, which I like to be transparent about. I like to show you all the stocks that I own. Oh yeah, so look at this. We also have CubeSmart, which is another REIT that I own. It's up 12%. EOG Resources up 8%. And Nike, we're still down 18% on Nike. DocuSign's done good. But yeah, that's how my Moo portfolio is doing. Once I buy a stock in here, I'll literally never sell it. That's my rule in here. And if you want to download the Moo investing app, help support the channel, make sure you download it with my affiliate link in the description if you want. But yeah, that's pretty much all I really wanted to talk about today. If you guys know why this huge sell-off is happening, besides, my thesis, let me know why you think the stocks are falling, these big names, because at the end of the day, these big names should still benefit from the lower interest rate environment. They should, have more sales. I don't really know the exact psychology, but I'm sure that these companies still do benefit from rates going lower.